What do lenders hide about home equity loans? Imagine you're thinking about borrowing against your home to fund a big project or pay off debts. You might think you know everything about home equity loans, but some things lenders don't always make clear. Let's uncover what they might be hiding or not emphasizing enough. First, even though lenders are required by law to tell you about the annual percentage rate, or APR, and basic payment terms, they might not highlight all the extra costs upfront. For example, appraisal fees can range from $100 to $500, and closing costs can add up to thousands. Sometimes, these fees are buried in the fine print or only mentioned after you've agreed to the loan. That can make the total cost higher than you initially thought. Next, many home equity loans and home equity lines of credit have variable interest rates. Lenders will tell you that rates can change, but they won't always explain how much your monthly payments could increase if rates go up. For instance, if your rate is tied to the prime rate and it rises by 0.5 percentage point, your payments might go up by a few dollars or more each month. It can be hard to predict how much you'll pay over time. Disclosures are often given in a format that can be confusing. If you apply over the phone or through a third party, the paperwork might arrive days later, making it easy to overlook important details. Sometimes, borrowers feel they didn't get all the information they needed before signing. Also, the right to cancel a home equity loan within 3 days is usually explained, but many people don't fully understand how to exercise it or what fees they might get back. If you change your mind, you need to notify the lender in writing, and they must refund all fees if you cancel within that window. Another thing lenders might not emphasize is that if they change the terms before you open the account, say, they alter the interest rate or fees, you have the right to back out without penalty. But many borrowers don't realize this or may not notice the notices sent to them. When third-party brokers are involved, disclosures are often given to the broker, not directly to you. This can cause delays or incomplete information reaching you, which might leave you with surprises later. Lastly, interest rate changes can be confusing. If your lender lowers your rate after the initial disclosure, they are not required to notify you. But if they raise the rate, they must send you a notice. This asymmetry can make it tricky to stay fully informed about how your loan's cost might change over time. So, while lenders do follow legal rules to disclose key information, the details about extra fees, variable rates, timing of disclosures, and third-party involvement can sometimes make it seem like they are hiding things. It's always a good idea to ask questions, review all documents carefully, and keep copies of everything before signing. Being proactive helps you understand your home equity loan fully and avoid surprises down the road.